Problem 10. Business Text is a small publishing firm. It has commissioned Professor A.K. Ahuja to write a book. The initial sales of this book are not expected to be good, although demand is likely to increase as time passes. Ahuja's contract states that his royalties will be calculated as follows. So business text here is the lessee or the licensee, and Professor A.K. Ahuja is the landlord or the lessor. So the terms and conditions of the agreement are as follows. He will receive a basic payment of rupees 20 for every book sold. The minimum payment during each of the first 2 years will be rupees 20,000. Minimum payment is the minimum rent. The publisher is entitled to recover additional payment made to royalties earned from the royalties of the third and the fourth years. So basically, short workings can be recouped only in the third and the fourth year. The maximum amount which can be recovered during any year is, however, limited to 25% of that year's royalties. So when you're recouping or recovering, you cannot claim more than 25% of that year's royalties, even if the surplus is more. Okay, it cannot exceed 25% of that year's royalties. There are no minimum royalties from year 3 onwards. So there's no minimum rent from year 3 onwards. All royalties are to be paid on 31st December, the last day of the firm's accounting year. The book was published during 1997. The number of copies sold in each of the first 4 years were as follows. You're required to prepare necessary ledger accounts in the books of business text. So business text here is the lessee. So we're going to start with the analysis of royalties payable. We can also call it the memorandum royalty statement. So our first column is the year. Then we have the sales. We have the royalty, minimum rent, short working / surplus, short working, recouped, short working, recouped, short working carried forward, short working transferred to P&L account, finally the payment to the lessor or the landlord. Okay. So we have the following years: 1997, then we have 1998, 1999 and 2000. So the sales in 1997, we can see here the number of copies sold in each of the first 4 years were as follows: 400 in the first year, 450 in the second year, 700 in the third year, and 900 in the fourth year. The royalties are to be calculated. He will receive a basic payment of rupees 20 for every book sold. So 400 into 20 is 8,000. 450 into 20 is 9,000. 700 into 20 is 14,000. And 900 into 20 is 18,000. Now, minimum rent, we need to be a little careful. The minimum payment during each of the first 2 years will be rupees 20,000. So basically, minimum rent is there only for the first 2 years, and they've also clearly said there are no minimum royalties. Minimum means the minimum rent from year 3 onwards. So we have the minimum rent only in the first 2 years. So we put a dash. Now we can begin. So in the first year, the royalty is 8,000, minimum rent is 20,000. So we have a short working of 12,000. Nothing can be recouped. So we carry forward the entire thing. Okay. The recoupment agreement is here. We'll just read it again. The publisher is entitled to recover additional payment made to royalties earned from the royalties of the third and the fourth year. So recoupment will happen in the third and the fourth year. Anyway, it has to happen. Here we will only have short workings. The maximum amount which can be recovered in any given year, however, is limited to 25% of that year's royalties. Okay, so 25% at the most can be recovered. So short working to P&L account, nothing. We, we need to see whether we can recover it, and payment to the landlord will be 20,000. Okay. Same thing here. Here the short working is 11,000. Nothing can be recouped. So the entire thing is carried forward. So we have 12,000 of last year, 11,000 of this year. So that comes to 23,000. We still have hope of recovery. Payment to the landlord will be 20,000. Okay. Now we need to be a little careful. Okay. Now actually there's no minimum rent, but and if we go as per our previous, whatever we have learned in the previous problems, we would have shown the entire 14,000 as a surplus. But what they have said is at the most 25% of that royalties at the most can be used as for recoupment. Okay, at the most 25% can be used. So for example, even if we show 14,000 as a surplus here, okay, when we are talking about recoupment, we can't recoup 14,000 even though we have a short working of 20,000, 23,000. At the most we can recoup 25% of that year's royalties. Now what is 25% of that year's royalties? Basically 14,000 into 25%. 14,000 into 25%, and 14,000 into 25% will basically be 14,000 into 25% is 3,500. So I hope you've got the difference. Though we have a huge surplus here, 14,000, and we have a short working of 23,000, we can't use the entire surplus. They said you can recoup at the most 25% of the royalty. So at the most we can recoup 25% of the royalty. Okay, so if we can't recoup the entire thing, how much do we carry forward? So out of 23,000, 3,500 has been recouped. 3,500 has been recouped. So basically 19,500 can be carried forward. So we still don't transfer anything to the P&L account. Another question is how much are you going to pay? You have a royalty of 14,000, but out of 14,000, the 3,500 has been used for recoupment. So basically 10,500 is what you're going to pay. Is that clear? Okay. So here, why I've not carried forward part of this or part of the first year, they've clearly said the publisher is entitled to recover additional payment made to royalties earned from the royalties of the third and the fourth years. So we can recoup from these 2 years. Okay, so we don't even, though we have not managed to recover everything from the first year, we can still carry it forward because we still can recover it from the royalties of the fourth year. Okay, again, though we have a surplus of 18,000 in the fourth year, at the most we can only recover 25% of that 18,000. So how much will that be? If I take 25% of 18,000, it's going to be 4,500. It's going to be 4,500. Okay, and it's going to be 4,500. So right now we cannot, they've not told us anything about recouping later. Okay, they've just said 25% we can recoup it only in the third and the fourth year. So whatever we have managed to recoup, we have recovered. We have recovered 3,500 here, 4,500 here. So the balance we are going to transfer to the P&L account. Now out of 19,500 we have managed to recover 4,500. Okay, so how much we have not managed to recover and we are going to transfer to the P&L account is 15,000. So the actual royalties were 18,000, but out of 18,000, 4,500 were used for recoupment. So that leaves us with a payment of 13,500. Is that clear? Why I'm not carrying forward? Because they've said why I'm not carrying forward to this and why have I transferred it to the P&L account? Because it said here the maximum, the publisher is entitled to recover additional payment made to royalties earned from the royalties of the third and fourth year. They have not said anything can happen beyond that. Okay, so I'm not going to assume that in the years to come they will be allowing us to recover this. So I've just directly transferred it to P&L. So coming to the entries now, they've asked us to show necessary ledger accounts in the books of business texts. So the first thing is the royalties account, royalties account. Then we have the short working account. I'm doing it without minimum rent. And then we have the landlord's account, that is Ahuja's, Professor A.K. Ahuja's account. Okay. So in the first year, we have a situation where the minimum rent is more than the actual royalty. So the entry will be royalties account debit, short working account debit to landlord. Okay. So royalties account debit to landlord on 31st December 1997. To landlord is to Ahuja. The royalties of the first year are 8,000. Similarly, we said short working royalties account debit, short working account debit to landlord. So on the same day, 31st December 1997, to Ahuja, amount of short working is 12,000. And then we say in Ahuja's account, we say 31st December 1997, by royalties and by short working. So the royalty is, I think, 8,000 and the short working is 12,000. The first entry is done. Next comes the payment. Landlord account debit to bank. So Ahuja's account debit to bank. And if you see how much is the payment made, it is 20,000. The last one is transferring the royalty to the P&L or the trading account. So here, since it's sales, we are going to try and transfer it to the P&L account. So what is normally the entry? Since we are in the books of the lessee, royalty is an expense for the lessee. It's going to come on the debit side of the P&L account. So it will be P&L account debit to royalty. So in royalties account, it will be by P&L account. 8,000. So close the accounts for the first year. This one will tally. Similarly, this will have a balance carried down here. Bring down the balance immediately. To balance brought down 12,000. This one also closes. Now coming to the second year, again we have a similar situation where the minimum rent is more than the actual royalty. So the same entries. The first entry is royalties account debit, short working account debit to landlord, so to Ahuja. So here it's going to be 31st December 1998 to Ahuja. The royalties are 9,000. Short working to Ahuja. Short working in the second year is 11,000. And in Ahuja's account, we will have by royalties and by short working. Since the entry is royalty account debit, short working account debit to Ahuja, in Ahuja both will be by. By royalties are 9,000. Short working is 11. Next, coming to the payment. Ahuja account debit to bank. So the payment that is made is 20,000. You can check it out. Payment that is made is 20,000. Okay. And then finally, transfer the royalty to the P&L. 9,000. So we are done with the second year. Just close it. So this comes to 20,000. This is also 20,000. This comes to, now you have a total short working that you're carrying forward of 23,000. So your buy balance carried down 31st December 1998 will be 23,000. You can check it with the statement. You're carrying forward 23,000. Bring down the balance. 1st January 1st January 1999. 23,000, and this also closes. Now we come to the third year. Now in the third year, our situation changes where there is no minimum rent and therefore the royalty is more than the minimum rent. So when we have a situation like this, we do the second set of entries. There's no short working. So the entry is royalty account debit to landlord account. Otherwise, it's royalty account debit, short working account debit to landlord. But since there's no short working, it's only to landlord account. So to Ahuja, so the royalties are 14,000. So if we say royalties account to Ahuja, in Ahuja it's going to be by royalties by royalties 14. Next is the payment. So it's landlord account to bank, and in case there's any short working, recouped. Okay, to bank and to short working recoup. So we have a recoupment. So the entry will be landlord account to bank to short working. If nothing was there in this column, it was dash. It would have been just landlord account to bank. So Ahuja's account 31st December 1999 to bank, okay, and to short working. This is basically the short working that is recoup. So let's see how much is paid and how much is recoup. Payment is 10,500, recoupment is 3,500. 10,500, 3,500. Okay, so if we say to Ahuja's account to short working, in short working it will be by Ahuja. By Ahuja. That is 3,000. Okay. Now, normally we can have another entry also here. In case there's any amount transferred to P&L account, any short working that couldn't be recouped that's transferred to P&L account, there'll be an entry P&L account debit to short working. But we don't have any transfer to P&L account, so we directly go to the last one where the royalties are transferred to the P&L account by P and L account. That is 14. So let's close it. This tallies. Then you have this, you'll have a balance carried down here, 23,000, 23,000. So buy balance carried down. So 23,000, so you'll have 19,500. You check your balance carried forward this year is 19,500. So bring down that balance so that we don't forget that. First, January 2000, to balance brought down 19,500. And your royalties account closes by itself. And now we come to the last year where again we have a similar situation where the royalty is more than the minimum rent. So again the same set of entries. Royalties account debit to landlord account to Ahuja. Royalties are 18,000. So if you say to Ahuja, in Ahuja it's going to be by royalties. By royalties it's going to be 18,000. Then we have the payment, which is landlord to bank. In case there's any short working recoup, that also needs to be added. So again, we have a short working that is recouped here. We have a short working recoup, so we need to show that accordingly. So it's the same thing again. If there's no short working recoup, it's going to be only be landlord to bank. Okay, please remember that. This two short working need not be there. It depends. If it's nothing is recouped, the two short working won't be there. So how much is paid? 13,500 is paid and 4,500 is recouped. 13,500 is paid and 4,500 is recouped. So if you say Ahuja to short working, in short working it will be by Ahuja. By Ahuja 4,500. 4,500. Similarly, we have something that is transferred to P&L account, which we didn't have in the previous year. Okay, so we need to show that effect as well. 15,000 is transferred to the P&L account, which is a complete loss to the lessee, which he couldn't recover. Okay, so since it's a loss, it's going to come on the debit side, so it will be P&L account debit to short working. So in short working, it's going to be by P&L account. Now we didn't have in the previous, why we didn't have this in the previous year, this by P&L account here, because there was nothing transferred to P&L account. Okay, so 15,000 and finally transfer the royalties to the profit and loss by P&L account. Okay. So if you see, all the accounts will tally. That's the last year. This becomes 18,000. This is 18,000. This is also tallying. This comes to 19,500. Both sides will be 19,500. And you see, this one also tallies. So they all close. So this is problem 10. The only difficulty in problem 10 was this, that only 25% of the royalties could be recouped. Okay, so not the entire surplus, but only 25% of the that year's royalty.